We think women need to talk more openly about money because money really matters. It shouldn't be embarrassing or confusing. Join the conversation. We'll be discussing a whole range of topics which will help you get comfortable with your finances. Money Matters. Brought to you by AJ Bell. Hello and welcome to another episode of the AJ Bell Money Matters podcast. I'm Danni, and this week I have drafted in a brand new member of the Money Matters team. Welcome, Eve.
Hello, Danni. Thanks so much for having me on the podcast.
It's so nice to have you on the episode, which came about actually because we've been back at the Affordable Art Fair in Hampstead. Thanks a lot to all the listeners who took advantage of our free ticket offer. And if you don't subscribe to our newsletter, what have you been doing? Because that's where you could get hold of them. And as always, the newsletter is a reminder of the great podcasts that we have on, the fantastic articles that you can find on our AJ Bell Women and Investing Hub, which is where you can sign up to the newsletter. There we go, full circle. But to get to the point, the Affordable Art Fair, it was the first time that you were there, Eve. What did you think?
Well, it was the first time I was there as part of the AJ Bell team, but I actually took advantage of the free ticket offer last year. So I got a really different experience this time. But I mean, I loved it so much. I'm a really big art fan. The AJ Bell offices in London, they actually back onto the Tate Modern. And so I really try and make the most of going in there for a 10-minute walk when I'm in the office. So I think it's a good space to go and clear your head when you get a chance to. But yeah, I think it was so wonderful. And obviously being up there for the AJ Bell event and supporting you and Charlene launching the report, which for anybody who hasn't read it, I sent it to all my friends and I would really encourage you to read it. But yeah, it was so special, wasn't it?
It really was. And just a reminder, we obviously spoke about the report on our last episode with Charlene and Rachel, but it is all about the gender pension gap. And we launched this at the Affordable Art Fair. But the one thing I always find when I go to the fair is that there are so many absolutely beautiful things. And I just want to buy everything. Did you buy anything?
I did it this year, and I don't know if you've heard or seen this online trend of, if I won the lottery, I wouldn't tell people they would be signed. Mine would be my walls just covered in, my home would just hopefully just look like the Affordable Art Fair. But one of our colleagues who walked around with me had to deal with me taking pictures of everything in that way that you think you'll go back and get something. So no, but I was coveting quite a lot of the art there for sure. Did you buy anything, Danni?
I didn't. Primarily that's because I don't actually have a lot of free wall space anymore. Before I had kids, my now husband and I, when we used to go abroad, we would usually find a gallery, whether it be an artist or a photographer, and we'd often come back with a piece of art. And so that is now on our walls, which is a lovely reminder of those holidays. And
oh, that's wonderful.
yes, it's really nice when you sort of see them and it takes you back to the person that you were when you got them. And my dad also was massively into collecting antiques. So growing up as a kid, what was on the walls would change all the time. But for him, that was where he put his money. That was how he invested. And I guess that's why I thought it was a really good time to discuss alternative investments. And also because you handily wrote an article about it as well.
Perfect. Yeah, delighted to come and talk about it. And I'm always happy to inspire you. So,
and it's a really interesting subject. And now more than ever, of course, we need to make sure, and the technical term here is diversification, something we were talking about with Georgina from BlackRock a couple of episodes ago. But to ditch the jargon, it's effectively making sure that what we do with our money, we put it in lots of different baskets, because we don't want all of our eggs in one, because if you drop that basket, then it makes for a great omelette, but not much else, right?
yeah, absolutely. I think diversification is the golden rule of investing. And you will hear us talk about it on this podcast or anybody with, some decent sense in the industry talking about it. But yeah, it's so important. And you talk a lot about what are considered the traditional investments on the podcast, these being stocks and shares, bonds and cash. But just like art, all sorts of things can be an investment, exactly like your dad was doing, thinking art and antiques. You know, handbags are caught up in alternative investments. And then there's things that sound a bit more, on the market and financy, like cryptocurrencies or precious metals like gold.
Yeah, and we're going to talk a bit more about gold and silver in a minute because actually more women have been turning to gold in the last few years. And there were some stats from the Royal Mint which really caught my eye, which showed that the percentage of women investing in gold had gone from something like 8% in 2008 to way above 25% in the last couple of years. So we wanted to get them on. But before we hear from them, let's get a brief rundown from you of what makes an alternative investment.
Yeah, so that phrase essentially applies to anything that isn't what we'd call that core basket of what we just said there, bonds, stocks, and cash. These are kind of the traditional trinity, and they tend to make up a majority of a person's portfolio. Alternatives are things which are less liquid, so that means you can't turn them into cash as quickly. Property is a good example here. Anybody that's ever gone through selling a house probably knows it takes a really long time from that decision to getting that money in your account. And alternatives also covers things that are more complex and less regulated. So cryptocurrency is a good example of that. And then the options we mentioned before, things like gold, oil, and silver have been spoken about a lot the past few years. And as you said, Dan, the Royal Mint coming on to talk more about gold and the journey that the price has been on and where it is now. But, really tangible things that you might not associate with investing. So repeating myself slightly here, but you've got exactly as we said, art, property. People might have heard of the Birkin bags made by Hermes, and apologies for the
Oh, yeah.
pronunciation of that if I've got it wrong. But in a bit of a rap finance Venn diagram here, there's a lyric from rapper Megan Thee Stallion, which literally is "They bought Birkins, I bought stocks." So these things do get affiliated together. But yeah, alternatives, just to bring it back, is anything that's regarded an investment pieces, that can go up in value. That's essentially what an asset is, isn't it? Something that we deem to have a value to it that's outside of what makes up that big bulk of your portfolio, being the bonds, shares, and cash.
They bought Birkins, I bought stocks. I
Yeah.
need to find that track. I really would like to listen to that. How would they fit into someone's investment journey?
Yeah, so it's a little bit of jargon that I'm going to bring in here, and I don't want to put people off with that, but this is the kind of language of the investment industry. I think it's really good to help familiarize with that. So, as I mentioned, the bond, stocks, and cash is what we would call your core part of your portfolio. This is really, the majority of what you want things to be in. And then alternatives we refer to as satellite holdings. These are bits that add on to the side are going to help bring up that performance. But because of the reasons we mentioned, they're not as liquid, they're a bit more complicated, they're riskier. So therefore, what we're talking about there with diversification, the job of them is to support what's going on in the middle there, but you don't want to put the majority of your investment with them because they're just a bit riskier. And, you want to have your more steady eddy stuff in the middle. This all culminates in the idea of diversification into what we call multi-asset. And the AJ managed funds are really underpinned by this idea of spreading your portfolio across all these different things because everything doesn't all move at the same time. So to put some numbers behind this and hopefully help people line that up, investments are normally, or they used to be, suggested you split in 60-40. So 60% is going in your equities, going in your stocks. And then 40% was going in your fixed income, which is your bonds. So you had your more risky equities and your more stable bonds. The idea that they're natural, counters to each other, diversification again. And then alternatives have come more in the picture. And now a lot of multi-asset managers suggest going what is the 60-20-20. So the majority of your portfolio, and I say this with the caveat of this is not the makeup that is appropriate for everybody. The different stage of your investment journey will alter where this kind of balance is. But just going with a kind of general view here, 60% stays in equities. Again, slightly riskier than bonds. So you want them to be doing a bit more work. but you've got bonds there to cover you when the market's having a rough day. But now it's about splitting that into having 20% in alternatives, because the market is so broad now and with so much volatility going on, it's actually really good to make the most of all the options that retail investors in particular had. So those things that before not everybody could get access to. So you have this opportunity to really put as much as you can to work and get as much of the market working for you. But you just got to you'll be conscious of how you're dividing all that up.
And I would imagine that there are potential pitfalls here. And I'm thinking that, for me, if I were to invest in fine wine, for example, the pitfall would be that I could drink it all before it gets to a point where it's actually worth more than I paid for it. But seriously, there are potential issues.
Yeah, I'm definitely coming for a party at your house, Danny, next time that's happening. But yeah, exactly. It's exactly that. And that phrase I used, risk, before. And risk is such an important thing. And it's not something to be afraid of, I don't think, in markets. It's something to be conscious of. You can make very active decisions about risk. So yeah, as I said, alternatives, things like gold, crypto, property, for different reasons, carry a bit more risk. So you just don't want to be majority in them, which is why you make them, only that 20% of your portfolio. Think of it a bit like, I'm a big F1 fan. Any fellow Hamilton fans who listen in, join me on this analogy. But think of the alternatives, very like the pit crew helping out on race day, but your bonds and equities and cash are the engine that's really driving it forwards. I probably should have used a Lando Norris analogy there, as he's actually doing quite well in F1, whereas Hamilton is maybe not getting started, but hopefully that helps drive the point home, to take the analogy to the end there.
Now, I promise more about gold because our special guest this week is from the Royal Mint and he knows all about the role of special metals in wealth management, not just about how shiny and pretty they are. Stuart O'Reilly is a private wealth consultant at the Royal Mint. Stuart, thanks so much for joining us.
No, thanks. It's great to be back.
Wanted to talk to you about the fact that we have seen a big increase in the percentage of women investing in gold in the past 20 years on Royal Mint.
Yeah, it's definitely true. In fact, we've seen a big increase in people investing in gold in general. So last year we had 49% more customers than we did the year before. And that was already a record year the year before. But the really encouraging part of that is the new types of people we're starting to see investing more and growing as an overall percentage of those customers. So one of those groups is younger people. So really heavily now customers coming through in Gen Z and millennial groups. And also women. So it was probably pre-COVID in 2019-20. 10% of everybody who bought or sold gold on the Royal Mint's website were women, 90% male. The year that's just gone, it was 26% female. So a long way to go, but a huge journey, I think, that we've been on in order to encourage new groups into investing. And I think it's not just gold. I think generally there is more interest in investing, and a lot of the barriers are around just getting started, really. So we've done a lot of work in making sure that the website is accessible, that our products are accessible, that we're using images and language that's more representative, more inclusive. And just once people get started, I think they kind of get the bug and keep investing, which is great.
And Eve, that's a trend that we're also seeing on AJ Bell platforms.
Yeah, definitely. Looking at the data since the beginning of this year, both men and women have been really bullish on buying gold. In particular, it's been the iShares Physical Gold ETC. And that's come in as one of the most popular tracker products. And interestingly, the global trackers are always really popular, but this gold one has been more popular across men and women than the big US trackers as well, which, has just been going absolutely, bananas over the past few years in terms of popularity. So gold has really been staying there and stickily staying up there as well.
Right, let's go right back to basics then. Stuart, how does one invest in gold or silver? Because my mind, and I imagine quite a lot of our listeners' minds, have now gone to a little cupboard in my house full of gold bars. But that's probably not quite sensible, especially when it comes to insurance.
I agree with you on the insurance point. I think that probably a challenge there, but there are people who do that. And you obviously you can get insurance. If you do have any kind of precious metals at home, it's probably best not to go shouting about it to lots of people. So insurance and also discretion, I think, is key there. But ways to buy gold. So the most obvious way, I think, is what's called an ETF. So it's buying gold or silver on the stock exchange in the same way that you'd buy any other stocks and shares, really. But you can also buy physical gold, like you said. You can have it delivered. You can store it in a third-party storage somewhere, or you can store it at the Royal Mint. So we have our own vault where you can buy physical bars, physical coins, and store it here. So you don't have to worry about insurance or delivery or anything like that. And there is another way of buying gold. It's called DigiGold. So it works a little bit like an ETF, so a little bit like stocks and shares, but you're actually getting kind of direct ownership of the metal. But kind of for all intents and purposes, how it works on a surface level is very similar. So you can buy small amounts, like £25, and what you're essentially buying there is fractions of large gold bars. Because those large gold bars that you see in the movies, they're really heavy, for one. So they weigh 12.5 kilos. But they're worth about £1.4 million today.
Wow.
So not many people own one of those, but lots of people own fractions of them. So that's what DigiGold is.
So how do you make money on gold then? I'm thinking particularly physical gold. If you see that the price that you paid for it has fallen at the point that you want to sell it, does that mean that you lose money? How do you make money on gold?
Yeah, with lots of things. Obviously, the price goes up and the price sometimes comes down. So timing can be important. I think we had a big spike in the gold price in late January, and then it fell pretty sharply, actually. So if you'd have bought at that point, you're potentially looking at the moment, if you were to sell it back, you probably wouldn't get back what you paid for it. Now, gold is tend to be viewed as a bit of a longer term investment. So hopefully people aren't kind of jumping in and out of gold that quickly. It doesn't really tend to work like that. But yeah, you want to sell at a price higher than what you bought at. When you buy gold, what you tend to find if you're buying physical is what's called a premium. So you've got a global spot price, which is the global price of gold. That's kind of, were you to buy gold anywhere, it's kind of roughly the same price. But obviously, if you were to buy a coin or a gold bar, there's a bit of manufacturing involved. There's logistics, there's design, all sorts of things. So you pay what's called a premium, which is above the gold value, and it covers the cost of that. So you have to factor that in. But obviously, the idea is over time, the price hopefully goes up, and then you can sell later on when the gold price is higher at that kind of live price.
Yeah, Stuart, listening to you there, it's really interesting. And just that DigiGold point, my parents are both jewelers back in the day, and my mum still sees gold as the ultimate way to have any kind of investing. So this is, I think she'd be fascinated to know you could own these like fractional elements of it. But just talking about the price there, and like you said, we had a run of record highs last year that continued into the beginning of 2026, coinciding with a lot of the geopolitical volatility that's gone on. And I'm kind of curious about where you think the price has settled now. I was talking to BlackRock a few weeks ago, and they said it's settled at, what feels like healthy levels. We're at about, 4,500 in USD terms, 3,400 in sterling when I last looked. So what's your take on where the price is at the moment? Has it settled a little bit after so many highs?
Yeah, I think so. Look, we've had a number of record years in a row in terms of the gold price, and that's largely been driven by lots of instability, lots of uncertainty around the world. Gold tends to benefit in those environments because it's seen as a bit of a safe haven asset. It's something physical, it's something tangible. It doesn't necessarily correlate with the rest of the stock market, so it can behave differently and therefore gives you a bit of diversification. But what we've seen recently looks a little bit odd in that sense, because we've had a lot of uncertainty, and yet the gold price has fallen back from recent highs in January, and it's kind of hovering at the same kind of level, and it has been for a few weeks now. And that's because at the moment it's driven by interest rates. So it wasn't that long ago, if we think back maybe even towards the the end of last year, where the expectations were that interest rates would continue to fall. Now that's changed quite significantly. There was concern in the US as well about the independence of the Federal Reserve, because they're going to have a new chairperson. And the fear, I think, in the market was that that person might not be as independent as the market would like them to be, and may just cut interest rates aggressively, even if it wasn't the right thing to do. So that was driving the gold price up. But now I think, because gold competes with government bonds, which pay a yield which is based on the interest rate, or is connected to the interest rate at least, gold is seemingly acting in the opposite way. So when it looks like actually interest rates are going to stay higher for longer, and actually maybe the Federal Reserve aren't going to be as resistant to keeping interest rates higher for longer, then gold has kind of suffered. It's taken a bit of a back step as a result, which is why we saw a big fall in January. And actually, if you were to look at a kind of a graph of the last 2 or 3 years and draw a line of the gold price, it did look a little bit overpriced towards the end of 2025 and into early 2026. It's fallen back down towards that kind of average line now. But I think what I'd say is, look, there is a lot of noise at the moment about interest rates, and I think we just don't know, frankly. A lot of it depends on what's going on with the war in Iran and with inflation. But a lot of gold investors tend to think longer term. They think about the benefit of diversifying a portfolio, so having lots of different asset classes, and that helps to kind of stabilize the portfolio. And then specifically to gold, I think gold does tend to do well during periods of uncertainty. This is a bit of an odd situation at the moment with interest rates. But, we were talking about government debt and deficits this time last year. That's kind of gone on the back burner a bit now, but it's not going away. Equally with inflation, gold can do well in inflationary periods. There is some inflation coming, we assume, from the energy crisis, but we don't know the extent of it yet. And then there's also lots of warnings as well from all sorts of places, really. The Bank of England, JP Morgan, tech companies, about valuations in the equities markets, about potentially a correction coming down the line. And again, because gold is negatively correlated to stocks and shares in significant market downturn periods, gold can help kind of stabilize a portfolio if that's what you're expecting to happen going forward. So longer term, the fundamentals still seem pretty strong for gold. It's just we're in a strange period where we're kind of fixated on interest rates.
And if you're interested in how those different geopolitical things impact the prices that we pay, interest rates, things like that, do take a listen to our next podcast, because we're going to be talking all about that. Now, Stuart, we often talk about tax on the pod and protecting our investment gains from tax. Where do we stand when it comes to making money from precious metals? Are we subject to capital gains tax?
So it depends what you buy and how you buy it. So there are tax wrappers, obviously, where you can buy a gold ETF, for example, in an ISA or in a SIP, and those wrappers will have their own tax advantages. But if you're just buying physical gold outright, if you were to buy a coin, so be that coin gold or silver or platinum, as long as it's a UK coin that's legal tender, and that's everything that we currently produce at the Royal Mint, then that is exempt from capital gains tax because it is legal tender. If you were to buy bars, they're obviously not coins, and therefore you would have to pay capital gains tax if you sold them outside of any tax efficient wrappers.
And the coins are quite interesting because I know you have all sorts of characters on there. And the Spice Girls made an appearance earlier this year.
Yeah, absolutely. I mean,
Love.
less probably a bullion investment piece, a pure play metal piece, more a kind of collectible piece, and a bit of a rarity. Yeah, the Spice Girls. There's lots of really interesting new themes coming up. I guess it depends on what you're interested in buying and what your overall aim is. If you just wanted to invest in metal and you wanted to do that through the vehicle of coins, then investors tend to opt for things like gold sovereigns or Britannia coins. But if you wanted a bit of collectability, if you wanted to kind of enjoy a collection of coins, then yeah, I mean, why not Spice Girls and Paddington Bear?
Thank you so much for your time, Stuart. Now, the one thing that we haven't done for a while on this podcast is ask our guests for a financial confession or dilemma. And today I'm very excited because I get to ask both of you for one. Stuart, I'm going to start with you because you've just become a new dad. Has that stirred up any financial dilemmas as a family?
Lots, definitely, yeah. The one I think though that stands out is around junior ISAs. So I think a junior ISA is really important. I think getting children to understand about money and investing is really important. And I didn't come from a family that was particularly interested in investing. I think we just didn't know really the importance of it and what that can do over your lifetime. So we were really keen to start a junior ISA for our son. And then, of course, you get confronted with, well, do you want a standard junior ISA or do you want an ethical junior ISA? And I think, particularly when they're so young, so he's 4 months old, you're kind of filled with this kind of hope and this positivity, and you think, well, maybe an ethical junior ISA is the way to go. Ones that kind of screens out some of those things that may be harmful, kind of net harmful to the world, tobacco and gambling and that type of thing. But when I looked into a couple of options, I was actually a bit disappointed with the kind of efficacy of the screening. So they had like a tolerance where they still allowed investment into some of those asset classes or some of those industries. And I thought, well, actually, the overall net impact if you're investing in those kind of companies versus the kind of projected returns profile of the standard ISA, I actually opted for the standard ISA in the end. So I still don't know whether that was the right decision. I'm still kind of wrangling about like whether that's the right thing or the wrong thing. But for me, the ethical screening wasn't quite as ethical as I thought it might be when I looked into the details.
I would imagine that is something which quite a lot of people think about when they've got new kids or new grandkids. Eve, have you got a confession you can share?
Well, my confession, I don't think is as meaningful and impactful as Stuart's, but I have a bit of a, I don't know if problem is the word. I have a bit of a hobby of going on Vinted quite a lot. If you guys are familiar with this, it's
Oh yeah,
it's like eBay if anybody is not familiar, but yeah, it's a concept of sustainable fashion and shopping. People upload their clothes and you can bid and buy them, and it's great. I'm from a big family of thrifters. My nan used to volunteer in charity shops when I was growing up, so I was forever kind of just flung into a pile of coats and told to pass the afternoon away there. So it's very much aligned with me. But I do just have a habit of going on there and being like, well, it only costs £10, £15, and then I've bought 10 things in a month, which is not the product and the point of what you're meant to do when you're shopping more sustainably. So maybe Stuart kind of aligns a little bit with what you're talking about in like the right way to approach these, do good for the world topics. But mine just ends up with me getting too many tops to wear. And then
you're supposed to sell as well as buy, Eve. That's the key.
I love all the things I have, and I just go and get more of them because it's secondhand and I'm doing a good thing.
Well, for anyone that has a similar habit to Eve, do take a listen back to an episode that we ran around Christmas time called Getting Minted from Vinted with Eleanor, who was just brilliant at talking about how you should go through those piles of stuff and start making a dent in them. Look, there are plenty of articles from Eve on our Women and Investing Hub now on the main AJ Bell website. But thanks so much to you both. Stuart, I know the Royal Mints on social media.
Yeah, all the usual places to expect: TikTok, Instagram, Facebook, LinkedIn.
And Eve, thank you so much for being on the pod for the first time, one of our brand new Money Matters team.
Thank you so much. I've had a great time and lovely to chat to you, Stuart, as well. Thank you.
Thanks again to all of you who are already signed up to our newsletter, and hello to any new listeners who found us thanks to our presence at the Affordable Art Fair. And don't fear, if you are the lucky winner of those vouchers, we will be in touch. Until then, do take a look at our social media to see how our report into the gender pension gap went down. Thanks to all our previous podcast guests who came out to support us, and a big shout out to Charlene, who was chatting about this on Women's Hour on BBC Radio for a few days ago. And thanks to all of you for listening. In the next couple of episodes, as I said earlier, we're going to be looking at how some of the world events impact things like our energy prices, our petrol prices. We're also going to be taking a look at prenups and petnups and why more women are travelling solo and how they're using their savings and investments to give them those opportunities. So please like and subscribe wherever you listen to your pods, and don't forget to sign up to our newsletter community so you keep up to date with everything that we are doing. Bye for now.
Before you go, please remember this podcast is for educational purposes, and the views expressed don't necessarily reflect those of AJ Bell. The podcast isn't telling you if a certain investment is suitable or not. Don't forget that the value of investments can change, and you can lose money as well as make it. It's also important to remember that how you're taxed will depend on your individual circumstances, and rules can change. The way an investment performed in the past may not be the same as how it behaves in the future. If you want help, go see a qualified financial advisor.